Good morning and welcome, Patriot Radio News Hour. Joe and Jason, happy hump day out there. March Madness has started. Yeah, the play-in games. Yeah, that's something relatively new, but the NCAA tournament well underway. And, of course, it's been madness all year, really, for the last couple of years, and today will be no different. We do have the Fed meeting. Well, I should say the conclusion of the Fed meeting, the press conference, that is coming. Nothing's really going to happen until that comes out today, but we'll tell you what's expected. We're also going to take a look at what the ramifications of what the Fed is going to most likely say today and how that's going to affect gold and silver, equities, really everything financially, all the debt markets. How's that? 800-951-0592. That's our toll-free number. The physical delivery of what we like to call wealth insurance. Just remember, all of these different instruments, your bank account, money market accounts, your 401ks, your IRAs, even your trading accounts for those that you have your trading accounts out there. Just remember, legally, if you don't hold it in your hand, you don't own it. You don't own the money in your bank. You don't own the money in your money market account. You don't own the money in your 401k, and you don't own it in your IRA. It's just how it works. Now, there's a bunch of contracts, but you got to understand what the fine print actually says. And as we told you yesterday, and we've told you all, we've been telling you, especially after Dodd-Frank and after the financial crisis, who's they? I guess the regulators, Wall Street, the banks, the SEC, the Fed. They ultimately will have final say. That's why we keep telling you, make sure you have gold and silver as part of your portfolio. AllAmericanGold.com is the website. And today, not only do we have the meeting, we're going to get the press conference with Jay Powell. This is one of those meetings we get the dot plot again. Yep, how many dots are they going to do? And everyone's expecting, that there's going to show, hey, we're still planning on rate cuts. And at least two is what I think Wall Street wants to see. Anything above that is going to be cheerleading time. Also, expected to hear that at least either one of two things. Either they're going to end quantitative easing or they're going to lay out the plan to end quantitative easing. I've seen both. My guess is they're going to lay out the plan. Of course, they're not really easing very much anymore. They're only down to the last $25 billion a month. And, of course, we know the United States, we have so much debt to sell. That'll at least give, I guess, a little bit of relief. It really hasn't helped. I mean, think about it. We were doing $75 billion and 25 billion, or it was $60 billion, I think, in treasuries and like $25 billion in mortgages. We're not doing mortgages anymore. We're only down to $25 billion in the treasuries, and still those yields, a lot higher than where they want them to be. And then the big phone call yesterday, Donald Trump and Vladimir Putin, and it probably went as expected, which really there isn't peace, but hey, we'll agree to not blow up each other's, energy sector, right? So no more bombing oil facilities, no more bombing power plants. That didn't even make it today. Both Russia and Ukraine bombed each other's oil and power plants. So I guess the end of the war in Ukraine a little farther off than people expected. I think Wall Street likes that. I hate to say that, but it does. And, of course, the resumption now of the Israel-Hamas situation in the Middle East. I guess, everything is on the table. I will say that Bank of America CEO Brian Moynihan, he was out today saying that he doesn't want the Fed to be lowering rates. So here you go, right? Because, and I don't know, is that going to hurt Bank of America if they do? I don't know. But having what Moynihan is saying is, hey, the consumer, they're still kind of hanging in there, and GDP growth is still pretty good. He's doing to me. I don't think the Fed should be cutting either. But he's saying that he wants the Fed to hold what they've been doing, saying that the 10 to 15 years after the financial crisis is something where, remember, they couldn't get inflation to 2%, so they said. The consumer continues to be solid. There's a lot of questions out there. We'll sort through it. I think he's talking about tariffs. But right now, we're not talking about what could happen. We're talking about what is happening. So, according to Bank of America, hey, I don't know what's going to happen next month, the month after, the month after that. But based on what I've seen right this second, the Fed should not cut. And I didn't know what things are going to cut today. But I think he's saying, hey, I don't know that they should cut this year. But we'll find out later. 800-951-0592, Patriot Radio News Hour here on this Wednesday, Fed Day. We're 3 hours away or so from getting the results. Don't expect rate cuts, but Bank of America, Brian Moynihan, kind of stepping up saying that the Fed should be on hold through 2026. Now, that is not what Wall Street will want to hear. So that's kind of a different view. Everybody out there wants to hear the Fed's going to cut rates twice this year. Bank of America CEO saying they shouldn't cut at all, that they should be cautious about cutting, knowing what the impact of tariffs, we don't know what that is going to be. So in other words, Moynihan saying, listen, I think inflation is going to heat up. I mean, that's what he's saying. Most of us do, and I think people are going to be surprised April 2nd, too, by how big. I'm starting to hear on some items we could have a tariff of 50% or more. So Moynihan saying the Fed should wait. They want to hold the firepower, as he calls it. Shouldn't be premature to boost the economy when we're growing at 2%. Now, that's going to be the thing. Are we going to keep growing at 2%? That really is something I think a lot of people are worried about. But right now, looking at the markets, the Dow's up 200 points. The S&P's up 30. The Nasdaq's up 140. The 10-year note actually is a little higher today, 4.31. Not a lot. 10-year note's just kind of been hanging out here in that 4.3 range. Crude oil, $67. By the way, we'll talk about that too. The baby drill has, the energy guys have weighed in on what oil will need to be to baby drill. In the meantime, gold's just hanging out right now. Now, gold hit a new intraday high late last night, early this morning. But right now, gold is down $3 at $30.32. Silver down about 40 cents right now, 33.56. And all day yesterday, silver was above 34, below 34, above 34, below 34. Of course, it's the May silver contracts that we care about, and that one's still squarely 34.30. Got really close to 35 on yesterday. So make sure, really, I think this is the problem. And Bank of America's CEO Brian Moynihan laid out the issue. We don't know what the impact of the tariffs are going to be. What we do know is they're not going away. This is not going to be hey, it's on this month, off next month. The Trump administration is counting on a lot of that revenue to come in to make spending looking better, saying the Fed should wait until we see what inflation is going to do. If that is the case today, if the Fed delivers that message, Wall Street will have a tough day. Right now, matter of fact, Wall Street's kind of falling here on the news, now below 200 points here as they're weighing in on what Moynihan said this morning. But we'll have to wait and see. I still think they're going to be pretty dovish. A lot of it will be the dots on the chart, which is going to be another one of those things that they'll want to see that most of the Fed governors are anticipating a softening. Because the only reason, why would they cut? The reason that they would cut is if the economy softens, right? So it's kind of be careful what you wish for because it may come true type of a thing, right? I mean, we're sitting there talking about the Fed should cut rates, and Moynihan says, well, gosh, inflation's above 2%, GDP, about 2%. Now that, I guess, That may be debatable, but remember, the first quarter is always a low number. The second and third quarters are the high numbers, right? First and fourth are the lows. But that would tell us that the central bank is anticipating pain in the U.S. economy. And I think this is kind of the problem. Wall Street will rally today if they say that. But it's not going to be rallying for a good reason, right? That's the problem. The Defense Department, Jaquint was out saying that they are going to cut 60,000 civilian jobs. So I guess I don't know if these are, hey, I'm not in the military, but I work for the government in the military, but I'm not in the military, or if this is contractors doing work for the Defense Department. I guess I should have read a little farther. My bad. These are, I work for the Defense Department, so I work for the federal government, but I'm actually not a member of the military, but I work for the Defense Department. 60,000. According to what we're getting from the Defense Department, only 20,000 were taking a voluntary resignation plan that will have them leaving, I think, in the next few months, so by summertime. So that means, doing the math here, another 40,000 will have to be let go. The goal was to cut 5 to 8% of the civilian workforce in the Defense Department. By the way, they're saying that 900,000 civilians work for the Defense Department. So that number, that's where they're getting. We want 60,000 to go. So that's something, again, I think this is another thing the central bank's going to be looking at. Of course, let's face it, it seems like we fire people and then these judges put them right back to work, right? And then what the government has been doing is putting them on paid leave. So I don't know, it just happened again. So a lot of these, maybe this is why we haven't seen the jobless claims moving up, is these people were told, hey, wait, because the judge will reinstate, you'll get all your money, and then you'll get put on paid leave. So this could be something, too, that the Fed may be anticipating. Are we going to see maybe an avalanche in layoffs in the next, say, 30, 60, or 90 days? But those are going to be things that we'll look out for. By the way, home builders today, well, I guess it was yesterday, home builder confidence, another leg down. Obviously, tariffs, higher construction cost, economic uncertainty heading into the spring, right? This is kind of the big sell season, right? March, it starts to get a little better, but then it really starts picking up, right? April, May, June, those are usually the best months for housing. By the way, it was much weaker than expected. Current sales of single-family homes and prospective buyer traffic dropped to their lowest level since the end of 2023. Then the gauge of expectations, also negative, saying that, hey, we don't anticipate it to get better. The home builders saying elevated building material costs, and then they started to put a number on the tariff. So according to the home builders, now these are going to be, like I said, new homes. So the home builders said that the tariffs on lumber and appliances and well, let's face it, across the board, all the supplies, whether it's plumbing, electrical, all of those things, according to the home builders, they're saying a single-family home will increase in cost by $7,500 to $10,000 for what they're saying is a typical new home. So right now, those new homes are running, in the 450,000 range. Home builders are saying with the tariffs, add another $7,500 to $10,000 on the typical home. Obviously, a bigger home, the more expensive home, you can do the math, right? $1 million home, probably going to add another $25,000. Just to give you an idea, lumber futures jumped to $658.71 per thousand board feet. That is the highest levels in over 2 years. Half of the jobs have already been supplied, but once the tariffs going into effect, that's when you're going to see the remaining cost into that. One of the home builders said that, hey, you could see a $30,000 increase once all of the supply is gone through and we're only dealing with just tariff supply only. So that's kind of an interesting development. Now you're talking, okay, that's a big difference. $7,500, $10,000. Okay, it's not great, but maybe that's doable. But according to the home builders, they're saying, hey, listen, we already got a lot of the material in the U.S. for the next little while. But once we get towards September, October, then everything will be coming in, and they're saying that will add another $19,000 to the total cost. So that'll bring it up, figure 10,000, 19. So what are we talking about? $27,000 to $30,000 more on the house. And by the way, They're also saying that the jobs lined up falling, so home builders are actually starting to scale back here, planning on building less new homes and saying by the end of the year, tariffs will add between $27,000 and $30,000 per home. So probably not the news that any of us wanted to hear. And again, why it is that you're probably hearing the Trump administration say we want lower rates. I mean, how low do the rates have to go to absorb that $30,000 and not make the mortgage payment? Because I think for most people that it's not necessarily the price of the home. It's what's my payment, right? What's my payment? And I think that's what they're going to care about. So it's going to be something where if B of A is right, inflation's going to pick up. And as long as the economy can hang in there, the Fed won't be lowering rates. It's going to be tough. Home builders, they're in a tough spot here. They're going to need substantially lower rates to help them out. When we get back, drill, baby, drill. Right? So one of the things that Donald Trump has been talking about extensively is, hey, let's get even more oil out of the ground. What do the oil drillers need to make that happen? I'll tell you about it next. 800-951-0592, Patriot Radio News Hour on a Wednesday here. We're going to wait for the Fed. Boy, anything can happen with the Fed today. Bank of America saying the Fed, not only should they be on, no one expects them to cut today, so they're not going to. It's all going to be about little dots on a chart. Right? What Wall Street wants to see is that the Fed is anticipating cutting rates multiple times this year, twice. Anything more than that, exuberance. Gold, this is my feeling. Gold's going to rally big time with a dovish Jay Powell. I don't know that. I'm not sure. I don't know that gold would go too far down in a non-dovish. I don't know. In theory, it should. If they say no, we're not cutting, and we're in a good spot. We don't plan on any rate cuts this year. I don't think that is what we are going to get. But one of the other big things that the Trump administration was talking about, drill, baby, drill, right? Driving down oil prices. Listen, a barrel of oil right now is $67. We just got oil inventory reports out today. We had another crude build, but not in Cushing. Cushing was down 1 million barrels, and we had less gas and less, it was a wash, right? But, yeah, we produced more, but then we had less diesel, less gasoline, and all was about the same, even, flat. Oil prices here in Arizona, gas prices here in Arizona, listen, ours is way high because of California. It's not our fault, it's California. Everywhere else is probably, I don't even know, but probably pretty affordable. But the Trump administration, they want to see oil get closer to $50 a barrel. Well, Harold Hamm, he's a big oil tycoon, wildcat driller, big Trump donator. They laid it out today. In order for drill, baby, drill, the oil industry is going to need oil to be around $80 a barrel just to cover the cost of drilling the wells. So right now, Harold Hamm says, listen, oil at $67, Nobody's drilling for $67. Why? Because it won't cover the cost. Now, does that mean there's no drilling going on? No. But in wells where, take like the Permian Basin and things of that nature where, hey, we know there's going to be oil there, but it's only going to be there for X amount of time. It's not going to be a producer for, 10, 15 years. Just to cover cost will need to be $80 a barrel. This talk over the last few days that oil could be in the 50s will not happen. It won't even, Jason, cover the break-even cost. And you got to remember, not only do they got to cover the cost, these guys got to pay dividends. There's a lot that goes into these oil drillers that when they look at the cost, it's not just the labor and the rigs and all the piping and all that. They're like, no, in order, we got to pay out people that loan us the money to do this, and saying right now that any new supply is going to continue to drive prices down. And if that's the case, we're not going to see any increase in U.S. oil production. So that's kind of the latest there. Not great news for, again, we want something to go down here. Boy, it'd be nice. Energy would be great. Cheap energy is always something that can drive the economy. And now hearing that, hey, listen, in order to do more than what we're doing right now, which is about 13 million barrels a day, oil's got to be 80, not 60, and definitely not 50.
And where do you see, so as far as the dollars per barrel, where does it have to go for it for I guess gas this summer to be higher, and where does it really have to go for it to be lower? Is 60 lower and 90 higher? I mean, from where we're at?
Yeah, so right now, like I said, we're sitting at 67. In the next 3 weeks or so, that price is going to rise. Why? Because, I got to get ready for the summer drive time. The Trump administration has said they're going to refill Cushing, Oklahoma. That hasn't happened yet. So I would guess, my guess is if it stays here, I think gas will be a little cheaper this summer than last summer if it stays here. If it goes back, into the upper 70s, it'll probably be the same. It would have to go above $80, $85, I think, for energy prices, at least gas. For gasoline to be more this summer than last summer. But remember, this is kind of the low mark, right? The March kind of ends where crude oil kind of bottoms out, and then usually April, May, we rally into the summer. April, May, June, we typically see ramping up. More people are going out. More people are traveling. And then, of course, kids got out of school, vacations, all of that kind of stuff. So, but Harold Hamm saying, listen, we got to have $80 in the winter. That's tough to see. So my guess is drill, baby, drill will most likely mean, hey, we're probably going to stay right about where we're at. That's my guess. That's my hope. Is if we can stay between 65 and, say, 80 at the worst, that wouldn't be horrible.
So 90, 100, 110, $120 barrels, that's where we see higher prices. So let's say we get $110 a barrel because of, let's say, and we'll talk about this next hour, but, Gaza. And Gaza spurs the Houthis to launch a missile, which spurs Trump to go blow up Iran, and suddenly got $150 to $200 a barrel, and we're looking at, $7 a gallon gas?
The wild card here, so you bring up two very good points. There's two of them. So the phone call yesterday with Vladimir Putin, it wasn't great. But they came out and said, hey, we're going to have a ceasefire on energy. Okay, so Ukraine will stop bombing Russia's energy. Russia will stop bombing Ukraine. That didn't even make it the night. that didn't even, Ukraine and Russia both blew each other up. And then you talked about Gaza and then Iran. Are we going to be in a situation where we sanction Russian oil and Iranian oil at the same time? Then we would need Drill Baby Drill. We'll be back after this. 800-951-0592. Joe and Jason here on this Wednesday. U.S. Silver Eagles, $800. $20 gold today, $31.50. And I'm going to say this, these prices may change after Jay Powell starts talking, after the Fed comes out. I think we are going to get a dovish report. I think the dot plot, remember, we don't get the dot plot every meeting. I think we get it every other meeting. This one is going to be, I think we're going to see the majority are going to say 2 rate cuts this year. I think Jay Powell is going to give us a lot of data-dependent stuff, saying that, hey, you know what, things are slowing, but they're still okay. But we're ready, right? We're ready. The second we need it, we're going to come in and lower those rates. Just remember, early this morning, gold was already up to 30.45. Right now, the price that I'm targeting on gold right now, and of course, it depends on what happens with the meeting. If gold rallies 30.75 and then 3,100 are I guess the next chance, in my mind, the next chance for a pullback's 30.75 if we get one at all. That will be, I think that's where the computers are going to take it. Obviously, silver, I already told you that yesterday. May silver, $35. That's going to be on the clock. If they come out aggressive and say, hey, we don't plan on cutting rates, we anticipate inflation continuing to be a problem, then I think you're going to see Wall Street suffer, and maybe we can get a pullback in the gold markets. But how big? I don't think very big. Do we go back below 3,000? Possible, but I think right now, Jason, if I'm betting here, I'm betting dovish Fed. But again, we don't know, right? We'll find out here in the next few hours. That's why I said, listen, if gold jumps, right, the price, gold and silver jump, prices are going to go up. If they go down, right, maybe we can lower them. And then of course, maybe they do nothing, right? Maybe gold and silver just say, right? We'll wait for tomorrow.
Let's just see what happens, because geopolitics can speed up gold, but economically, I think what you're saying is good. But Joe will admit we don't know for sure what's going to happen. There could be a pullback at any time, but it seems like we've got a nice hardy path of what gold is doing since to the end of 2023, which is it's just going to keep going because something major is going to happen. And I don't, Joe. I could see $3,500 gold at the end of the summer. You know, I could see $4,000 gold by Christmas as a percentage. It sounds ridiculous, but $300 gold to $400 gold is the same as $3,000 gold to $4,000 gold. It is the same. It literally is the same. So when people are sitting around, and then Joe and I were watching our customers, suddenly 3,000 seems to be tickling the fancy of a lot of customers. So I was like, well, wait a minute.
All of a sudden,
maybe it's just going to keep going, right, Joe? Maybe, I better jump on this thing. Yes, because $300 to gold to $400 gold is the same as $3,000 to $4,000. It could move that quickly. We're talking $50 moves, $100 moves.
I will say this. I'll just use Russia. Okay, so the big call yesterday, a lot of talk about how Putin was late, right? Didn't hey, I hold the cards, as you said. I know I hold the cards, and really didn't give a lot of room for any type of immediate ceasefire. And then what happened overnight last night, where not only did Russia hit some Ukrainian energy, Ukraine, they went ahead and bombed Russia's oil hub. Does Donald Trump change his tune and decide, okay, if you guys are going to be unrealistic, now I'm gonna put the heat on Russia and crack down on Russian oil? And then, of course, we know about his comments with the Houthis, and of course, Israel, 400 or 500 Palestinians dead in the latest strike, saying, hey, peace talks are over. We're going back to taking out Hamas. And then Iran's going to be held responsible with anything the Houthis do. Could we see a situation where, hey, we're going to cut off Russian and Iranian oil? Then, Jason, all of a sudden, right, that now we've got an energy squeeze on top of a tariff squeeze.
And gold is, as I said before, is a leading indicator. So why do I feel like this rush to gold? Is because the rich and the powerful of the world are dumping into gold because they buy in first, which is why gold leads into these economic problems that Joe's talking about.
Do they already know this is going to happen?
They already know.
Do they already know? I mean, I hope not, but boy, that is a scenario.
That's what gold's saying.
Forget about 3,500. Yeah, that'll be nothing in that scenario.
Yep.
800-951-0592. Final segment coming up. 800-951-0592. Again, rolls the U.S. Silver Eagles, $800. I think we're at $35 is. It could be any day. Any day. You're going to see $35 silver, and then forget about $800. You're just not going to get it. $20 gold right now, $3,150, $3,150. And like I said, gold's been flat all day. Gold just, had a big up day again yesterday. We normally don't see gold. Usually Fed meetings, gold sells off. That doesn't appear. And, of course, we all know why it's not selling off. But right now, gold $32.50, down $2.90 as we wait on the Fed. But I'm going to say this. It really doesn't matter, guys. They could come out and be dovish. They could come out and be, whatever, bullish, and we're not cutting rates. We all know that what the Fed says today means nothing tomorrow. Nothing. These dot charts that they're so excited about, they're never right. Never. As soon as something changes, they'll just change. Oh, well, we said no rate hikes. Well, then all of a sudden, this happens, that happens, and all of a sudden, they come out and say, oh, yeah, we're going to start cutting rates. I mean, it's just that fast. So it is kind of laughable that they put so much importance on this. But this is a trading day. This is where traders come in and do their thing. And we just speculate, right? The more dovish Jay Powell is, the higher the gold price is probably going to go today. That's usually how it works. Does that have any effect on anything? Nope. You know what does? What is real in the world. That's what does. Believe me, if all of a sudden we're sanctioning Russian oil and we're bombing Iran, nobody's going to care about what Jay Powell said today, Jason. Nobody.
Right, and I don't think a lot of people really pay attention to the Fed like we do, Joe. So it's probably going to slip on by anyways because, what happened in
But you're right. Listen, the majority of Americans don't even know there's a Fed meeting today. They probably couldn't even, they probably couldn't even say who the head of the Federal Reserve is. They probably don't even know Jay Powell by name.
Correct. And so the economic news people are definitely going to be all over this, but what piece of the news are they going to get on the day after what happened in Gaza? And you got Putin, right. And it's going to be buried by whatever Trump or Elon Musk is going to entertain the American audience and the world audience. So it's going to get lost in translation because once again, sure feels like we're getting ready to point the big finger at something else, but central banks and these big corporations that really make the decisions to make things more expensive, print money like crazy. And it sure looks like quantitative easing and lower rates, Joe, doesn't it? Whatever excuse they can make so that they can do such a thing and try to float this boat down this sinking boat. Get it further down. Can you get the sinking ship through the Panama Canal before it just clogs up the Panama Canal and messes up the whole shipping system, right? Doesn't it feel like that's what we got going on?
Right.
We got a ship that's sinking right in the middle of the Panama Canal and nobody's going to get through.
Remember that happened a few years ago. Somehow some ship got turned around and blocked the whole thing and they couldn't get it out. Anything could happen. That's why you have gold and silver. Why? Because anything could happen. 800-951-0592.